even the 10% cushion is not there. When you are supplying to your agent, you will have to supply at the full value at which it has to reach the end customer, or not less than 90%, which can be a cover for us. As usual, rule 30 and 31 still there. If these two doesn't work, rule 30 110%, or rule 31 whatever is generally accepted accounting principle. Now moving from 29 is over, 30 and 31 is already discussed. The next content is in terms of specific scenarios addressed in valuation. Specific types of business which are addressed in valuation. Purchase or sale of foreign currencies is one. Booking of air ticket by an air travel agent. Life insurance business. It's only for life insurance, it is not for general insurance. And dealer in second-hand goods, that is a separate treatment. Goods repossessed after default. The finance companies which I gave you as an example. Tokens, stamps and vouchers. How to do the valuation. Let's get into these special types of valuation one by one. So the latest addition has been the valuation of lottery tickets, because under GST, actionable claims are not taxable. It is not a supply, but actionable claims other than betting, gambling, lottery. So betting, gambling and lottery is taxable under GST, and it is taxable as, very interestingly, goods. It is not taxable as service. Section 2, subsection 52 says, goods definition, goods includes actionable claims. So we think every actionable claim is taxable as goods? No. That they have clarified in schedule 3 by saying, actionable claims other than betting, gambling and lottery. That means, betting, gambling and lottery is only taxable. Any other actionable claim you do in a transaction, like LC discounting, bill discounting, that will never be treated as supply. There is no GST on that. But lottery, betting, gambling, there is GST. Lottery ticket, I am buying for 40 rupees. What is the GST? Inclusive method. If the GST is going to be 12%, into 100 by 112 will give you the basic value, or into 12 by 112 will give you the taxable value. That's it. That has been prescribed by way of a circular recently. Now sticking to the other business, which is the foreign currency. One of the methods that is suggested, and in whatever I have seen, foreign exchange dealers, none of them have used this method right from service tax area itself. So I am not talking about GST. Right from 2012, when this was proposed as part of service tax rules, rule 67A, 67B, nobody went for this. But still, we will have to discuss about it for a minute because it is part of our discussion. In case of foreign exchange business, the same example I gave earlier, the forex dealer is buying dollar from me at 64, but when he sells, he will sell it at 65. Obviously, more than that. The difference is called spread. He is not going to pay GST on that. But what the government says is, you will have to pay GST. But he asks a question, sir, imagine 64 rupees if I am buying from somebody, I go and give it to RBI. RBI will give me only 63. So I have to further sell it here only. Then how do I calculate my margin or my service value? That is where department has given this rule by saying, do one thing. Whatever is the transaction value that you are doing, less RBI rate. For example, I am giving currency to you at 65. Today RBI rate is 63. 2 rupees per dollar is the taxable value. If we have exchanged $10,000, 10,000 into 2, 20,000 rupees taxable value, on that you pay GST. Like I said, none of them use this method, but this method is prescribed by the department. A variation is possible. How? Sir, neither of the legs contain Indian currency. I give US dollar, I get, let's say, euro. In that case, how will you do this valuation? So that has also been addressed. Okay, do one thing. Take the dollar, convert it into Indian rupees at RBI rate. Okay, step 1. Step 2. Take euro, convert it into Indian rupees at RBI referred rate. Okay, then whichever is lower, luckily they have not said whichever is higher. Out of these two converted into Indian rupees, whichever is lower you take. Oh, that is taxable value. No. On that, 1% is taxable value. If foreign exchange dealers start doing this, they will do only this. They will never be able to do business. There is only third method also. If you are doing transaction in a day where there is no RBI rate, then what should I do? Take the transaction value into 1%. That is your taxable value. As the answer is given in Rule 32. Like I said, none of the foreign exchange dealers follow this because there is a much simpler method which you can use like a table for income tax calculation. Here, what they say is how to calculate the taxable value. If the value of money that is exchanged is going to be up to rupees 1 lakh, simply take 1% of the gross amount of money exchanged as your taxable value. Minimum should be 250 rupees. So up to 25,000 rupees, I do any foreign exchange transactions, the taxable value will be still held as 250. If I do for 1 lakh, exactly, then 1% of 1 lakh will be 1000 rupees. That will be my taxable value. Mind you, that is taxable value. On that, 18% GST. So it will be much lesser than that. If my value of transaction is going to be more than 1 lakh, but up to rupees 10 lakhs, then what should I do? Good. First 1 lakh, we will keep that 1% same. So it remains as 1000 rupees taxable value. Plus, what you can do is, 0.5% of the amount that is exceeding 10,000. So exceeding 1 lakh. So exceeding 1 lakh up to 10 lakhs, whatever value is there, on that value, 0.5% is only 0.5% is only the taxable value. But that has to be added to 1000, which is the basic taxable value. Let's say, for example, I am doing an exchange only for 10 lakhs. Then what will happen? For the first 1 lakh, 1% taxable value, which is 1000. Next 9 lakhs, after 1 lakh, but up to 10 lakhs. Next 9 lakhs, 0.5%. 9 lakhs 0.5% is 4,500. So together my taxable value will be 5,500. What if I do transaction more than 10 lakhs? Come to the third slab. 5,500 as basic because first 1 lakh 1000, next 9 lakhs 4,500 basic, plus you will have to take 1/10 of a percentage. In other words, 0.1% as taxable value of that amount which is exceeding 10 lakhs. So 5,500 is the basic. 10 lakhs mele enna iruko adula you are going to take 0.1% as the taxable value. But good thing, subject to an overall limit, the maximum cannot exceed 60,000 rupees. So max, my taxable value can only be 60,000. I will pay 18% of 60,000. So imagine, isn't it very easy? People will directly say anything that is exceeding 1 crore, forget it. Pay on 60,000, 18%. Transaction completed. And your GST liability cannot exceed that because the maximum value has been prescribed here. Which is why I said for forex dealers, this is the golden table. They never go beyond it. They use only this method for valuation. And that valuation which they do, they will be eligible to take or they will be eligible to pass input credit to us. You go and buy forex from a person for your employee who is going to go to foreign country. That employee is going to go to foreign country for your business purpose only. So this forex commission on which whatever GST you paid, you are eligible to take input tax credit. That commission calculation happens like this. Moving to the third category of special valuation is booking of air ticket by air travel agent. So we are not discussing about the airlines per se here. We are discussing about the air travel agent through whom we do the booking. There was a huge amount of confusion till last month. It is being resolved by the airlines from last month. I'll tell you the confusion. You might also encounter this in your audit scenario. When I go and buy from an agent 10,000 rupees worth of air ticket from here to Delhi and back, he has given me an invoice. What this fellow does is, he goes under this method of valuation. What is this method of valuation saying is, if it is going to be a domestic booking, take 5% of the basic fare as your taxable value. So he takes 5% of the basic fare as taxable value and that value only he pays GST. So 5% of the basic fare, 10,000 rupees if you assume as basic fare, he will take only 500 rupees as taxable value. On that 500 rupees he will pay GST. So his invoice will only contain 10,000 rupees plus GST on 500. So people were wondering, GST on 500, why? That is because of this. Now what was even more puzzling was, this airline company, who has given this ticket to him, they also, what they did was, when they filed their GSTR1, which will come to as GSTR2A, when they filed, they knew my GST number. So what they did, correct, on 10,000 rupees itself, there is an element of GST. This fellow sold it to 10,000, sold it at the rate of 10,000 to him. There is an element of GST in 10,000 itself. that we will invoice again to Shankar. So what happened? I never received the invoice from the airline, but I have got the input tax credit from the airline. The agent also gives me input tax credit, the airline also gives me input tax credit. Same transaction, two credits are available. Go and check if you have done any booking using your GST number before May. Into your GSTR 2A, two numbers will be there. For the same transaction, two amounts will be there. But the legal part is you cannot take input tax credit on the airline's credit because he didn't give you an invoice. You can take credit based upon the invoice given to you only. As per Rule 36, only the invoice will be an eligible document to take ITC. That invoice has been given only by your air travel agent. On that amount only you can take input tax credit. Whatever is reported by the airline, you just reject it. Or you say it is ineligible, close it off. Don't take input tax credit because somebody was telling me, now that we are receiving notices from the department that you have taken so much of input tax credit, more and above what is available in your 2A. Can we go by this option? Whatever comes in 2A only we will take input tax credit. Then I told him, no, that is even more riskier. Somebody will wrongly report an invoice against you. You will end up taking input tax credit for that. It is better that we take credit only as per our books and we reconcile with 2A from time to time. Whoever has not reported, pull that supplier back by saying that next payment will not reach you. That is the best method to reconcile. So this can come into such reconciliation situation. And this 5% taxable value will increase to 10% if the ticket booking is for an international travel. So domestic travel, it is 5%, on that value only GST. If it is international travel, 1 lakh rupee ticket, 10% of it will only be deemed as taxable value. On that only, the agent is supposed to charge you GST. The next one is on the life insurance business. Again, very unique, like banks, but you may or may have, you might encounter a client who is having this life insurance as a business, where the key thing that they are asking is, this is applicable only for life insurance first. And second condition is, it should not be only a risk cover policy. If it is only a risk cover policy, sorry, this option is not available for you. You will have to pay GST on the full premium. If it is also having some element of money back, the endowment policies, return, that is where this will apply. So what they have said is, where it has got dual benefits, what you do is, three kinds they are talking about. One, a normal policy where you will pay every year premium. Second, you will pay one-time premium and get the money at the end of 20 years, 30 years, like that. If it is going to be a one-time premium, single premium policy, then 10% of the premium is only deemed to be taxable value. So I am paying premium once, single premium 10 lakh rupees. GST will not be calculated on 10 lakhs, GST will be calculated on 1 lakh, because 10% of the premium is only deemed to be my taxable value. If it is a normal premium policy where I pay every year, then there is a method of calculation. Whatever first year premiums are received during the year, the taxable value is 25%. First year premium for that policy. So every policy will have a first year premium, and then only you will have subsequent years premium. First year policy premium means 25% is taxable value on that 18% GST. If it is going to be any subsequent year premium payment, the taxable value gets halved. It becomes 12.5% as the taxable value. So first year premium, if I pay 1000 rupees, on that GST will be 25% of 1000 into 18%. Subsequent year premium, same 1000, it will only be 12.5% of 1000 into 18%. Now the interesting part, second-hand goods. You might have people as client who are dealers in second-hand goods, or people who deal with second-hand goods dealers. For either of them, this is critical because they use something called as margin scheme. What is this margin scheme? If I am a second-hand goods dealing person, then if I am buying something, let's take the common example of motor vehicle, car. I am a second-hand car dealer, right choice or second choice, some kind of car dealer who will buy old cars and sell old cars. The old car that I purchased is 2.3 lakhs. The 2.3 lakhs car, I am going to refurbish, do some here and there changes, make it look like a better car and sell it for 2.8 lakhs. The provisions of Rule 32 says you can pay GST only on 50,000. because you purchased it at 2.3, you are selling it at 2.8. GST liability arises only on 50,000. I don't have to pay on the full value. But where this will go for a toss is if my supplier is a registered person. If I am buying a car from a registered person, a doctor or a chartered accountant who is a registered person, for the 2.3 lakhs itself I will have to raise an invoice on him. Then only my GST liability will get fulfilled. In that case, he cannot go for this. On this 2.3 lakhs, whatever GST I charge, he will have to take it as ITC, input tax credit, and then whatever he is selling at 2.8 lakhs, he will have to set it off against that. But if this is predominantly meant for those people who are dealing with end consumers, B2C transactions. So in those cases, the value on which GST is to be paid on the margin, and it is not to be paid on the total value on which the transaction is done. And this recently went in for, I think, in case of normal assessees also, we had seen the provisions being changed for 3 times during the last year. July, August, if anybody had sold their old existing car, for example, under GST, let's say a company, they have sold. I had a client who was itching to sell his Mercedes Benz. He said, sir, 2012, it is old, I want to sell it off. I said, okay. Then he came to me, tax, how much, sir? Then I had to tell him, the tax in July and August was, that is when he asked me, the rate of tax applicable on the similar car, which is new today. So the GST was 28 plus 15. 15 is compensation cess. 28% is GST. So I told him 43% is the tax. He was like, I am going to get only 13 lakhs from this. Out of that 43% I will have to pay GST. Yeah? No, I will not sell. I said, good, don't sell, go. He has gone. Now, end of August, department changed their mind and they thought, okay, fine, let us give some benefit to these poor fellows. What they did was, if you are selling a car, motor vehicle specifically, includes car, which is purchased before GST, but sold after GST, the tax rate is not the tax rate of the current cars. Tax rate is 65% of the current price, current cars rates. So it was not 28%, it was 65% of 28%. It was not 15% cess, it was 65% of 15%. GST as such was confusing that time, and this gave different confusion, and the 65% was never there in the return to file. Some people thought 65% tax, no, 65% of the tax is what we have to pay. And this continued up to 25th of January, where they again changed their mind and said, nothing doing, cess, I will give an exemption. So old car if you are selling, cess exempted, beautiful. Then I will give you one more idea. The second idea is, you need to pay GST only on the margin. So you don't have to pay GST on the sale value. You didn't avail input tax credit when you purchased the car, because neither CENVAT credit rules nor Tamil Nadu VAT gave us the provision to take input tax credit on that car. Then they said, good, you can find out and tell me what is your depreciated value. Take that, compare it with the selling price. If the depreciated value is more, no need to pay GST. If the depreciated value is less than your selling price, pay GST only on the differential. End of chapter. This is applicable from 26th of January. So this same client, he came and sold it only in February. He was very happy, because had he sold it in July or August, he would have paid 43%. January, he didn't pay single rupee, because income tax depreciation has already overtaken the selling price of the car at the current rate. Over. Imagine, within a span of 7 months, so much of P&L impact could have happened because of GST. So when we do our finalization or audits, we may have to be careful depending upon which period they have made the sale and how they have disclosed it in the return. We have to check. And then the last effect will be from 26th of January, this is the provision. We'll have to see whether they are complying with that provision. Because some companies took a stand, if you ask me to pay the current rate of tax, I will take input tax credit on the cess also. Now the government has quietly stuck it down by saying cess is exempted on the second hand car that you are selling, which means the car purchased, I cannot take input tax credit on the cess. Anyway, motor vehicles you cannot take input tax credit unless you are in the same business. Is either giving it on hire or buying and selling of motor vehicles. So you have to be careful when it comes to ITC as well as the valuation of second hand cars. The similar element, but not so gentle, is repossession. When you go and sell, it's different. When somebody comes and takes away, that is very different. I don't pay EMIs properly, they come and take my, repossess my car. Now what happens? Nothing. I'll have to go and pay and try to get out of it, else I'll have to say, okay fine, the car is gone. No, the problem is for that hire purchasing company. Because I have given it to a person who has used it for 2 years, paid it 20 EMIs properly. After that he stopped. 4 months I waited, he didn't pay. Now I went and repossessed my vehicle. This repossessed vehicle I want to resell. When I want to resell, what is my price? Now the question comes, what is your price? Yes, I didn't use it, so I cannot go by depreciated value. So that is where department gave an option to them saying, imagine, for every quarter it is used by the other person, 5% of the value has come down. So indirectly what they are saying is, every such repossessed item is worth only for 5 years. For every quarter 5% now, for a year it is 20%. 20 into 5, 100%. So every quarter of use, reduce 5%, remaining whatever value comes, that is your book value. And see what price you are able to get in the market. If the market price is going to be more than the book value, the selling price, on the differential you pay GST. If the market price is going to be going lesser than the price at which you have arrived at 5% reduction for every completed quarter of use, then you don't have to pay any GST. So this is the option given for repossession. So finance companies, banks who do this repossession will have a huge role to, this valuation method will have a huge role to play there, because they are not disturbed by asking to be paid the tax on the full value. They are going to pay only on the margin, if any. The next specific method of valuation is on the coupons, vouchers. Now in case of coupons and vouchers, the time of supply itself, both in case of goods and services, there is a clear provision. Let's say I am going to GRT today and getting a 10,000 rupees gift voucher for giving it to my friend who is getting married tomorrow. On this 10,000 rupees gift voucher, GST is to be paid at the time of purchase of the voucher, or it is to be paid at the time of purchase of the goods under the voucher. Finally, I have thrown an open question in the hope that I will get an answer. It is on redemption, sure. That is how it is given in the law? No. Law says if the goods or services are already determinable, then tax has to be paid at the time of giving the voucher itself. For example, GRT, because the GRT does this very intelligently. For example, GRT will get only jewellery, means at the time of issue of voucher itself, GST is payable. But luckily for goods, they have exempted the advance. When you receive an advance, you don't have to pay. But in case of services, best example, naturals, beauty spa, green trends, they give you vouchers which you can use next time. You go there, will you get different rated transaction? No, it will always be 18% only. So at the time of issue of voucher itself, they are liable to pay GST. So the law doesn't say, in case of vouchers, it is only at the time of redemption. No. If it is ascertainable at the time of issue of voucher, at the time of issue of voucher itself, we are liable to pay GST. If it is not, then only we go by redemption. So for example, Flipkart or Amazon vouchers, 100% sure. We cannot pay at the time of procuring the voucher, because you do not know whether the person will buy an exempted item or a 28% item or a 12% item. So there it is rationally correct to go by redemption. You have to be careful when it has to be taken. And some people also have a different view. Sir, the friend to whom I gifted this 10,000 rupees gift voucher goes and buys a 15,000 rupees item. And what he thinks is 15,000 minus 10,000 on 5,000 only GST. No. 15,000 GST on 15,000 less 10,000. Because there is a common mistake. They tend to think, this 10,000 by GST. No, 10,000 is only equivalent to money. It has to be deducted from the overall payable. Overall payable is how much? 15,000 into the GST. That is the amount that you are liable to pay. Adila reduce this 10,000, pay only the remaining. This is a very subtle calculation difference which can result in wrong calculation and liability also. And let's move to the last recognizable but very important concept in GST, which was promptly copied from our erstwhile service tax rules, Rule 5.3, is the concept of pure agent. Who is a pure agent? Why we require the concept of pure agent? Doesn't require any further stressing, for the importance needs to be stressed, because even chartered accountants, we are pure agents in most of the scenarios. Take an example, I am doing an incorporation of a company. That person is coming and telling me, sir, you pay the fees, I will give you back along with your professional fees. So what I do is I pay the ROC fees, incidental expenses, everything. I also charge him for my professional fees. Let's say at the end of the day I have charged him 1,50,000 rupees. That 1,50,000 includes 1 lakh rupees of fees which I have paid on behalf of him to the department. 50,000 rupees my professional fees. This is what I have done. Now, am I liable to pay GST on 1,50,000 or 50,000? Logically, you would think that it is only on 50,000. How to place that logic in law? The concept of pure agent does that. Pure agent says, if you have incurred something as an agent of somebody, and he knows that you are an agent, and you have incurred and the bills are all taken in his name only, and you don't charge him a single rupee extra than what you have incurred. If all the 4 conditions are satisfied, then the value of such reimbursements will get excluded because it is pure agency in nature. Remaining value only GST is to be paid. This will be ultra applicable in case of clearing and forwarding agents. He will come to me, the C&F agent, will take 5 lakh rupees from me. I'll say, okay, go clear my goods, pay the tax, come and deliver it in my factory. He will go to the customs office, pay 2 lakh rupees as or 3 lakh rupees as customs duty. Then loading and unloading 50,000 rupees. Hire a transportation vehicle, another 50,000 rupees. Bring it to my factory, loading and unloading, another 25,000 rupees. 4 lakh and 25,000 rupees gone. Now this fellow will quietly raise an invoice for another 25,000 rupees for his services. Give back the 50,000 rupees to me. Now literally I have done 4 lakh and 50,000 rupees of transaction with him, but out of which his supply is only 25,000. He cannot take 4 lakh and 50 to his P&L. He should not actually. But how to avoid it, how to take it away from GST, he should demonstrate clearly that he is a pure agent. What is the requirement of a pure agent? Yes, I have given a PO to you. There is an agreement between both of us. 2, you have incurred only on behalf of me, you are not the owner. Satisfied. 3, all the invoices he should get in my name. Bill of entry is filing in my name. The transporter invoice is getting in my name. So I end up paying reverse charge. Loading and unloading bill he gets in my name. Perfect. Third condition also satisfied. Fourth important condition. Whatever he has paid, only he should claim from me. That whatever bills he is giving me, that only I will pay to him. Then this 4 lakh and 50 transaction, 4 lakh and 25 can be easily taken away. Only on the remaining 25,000, which is his invoice, he is supposed to pay me, charge me GST, which I will pay to him. Then how to bill this 4 lakh and 25? Can I include it in the invoice? After the amendment which has come in January, yes. Before the amendment in January, we had a problem. When there is no GST involved, you still want to give a document. It is bill of supply. You have to give a separate bill of supply, separate invoice. From January 26, the amendment in rules, they have brought in place that an invoice can be invoice come bill of supply. So what this fellow has to do is raise an invoice come bill of supply, where 4 lakh and 25 is reimbursement in nature, 25,000 rupees taxable, take GST from me. How does he report it in the GST returns? In GST returns, you will have 3 columns. Invoice value, taxable value, tax. Invoice value is taxable value plus tax plus such non-taxable value. So what you should do is, let's take 10% as the GST for a minute, then taxable value is 25,000. 10% of it GST is 2,500. What you should give in invoice value is 4 lakh and 25 plus 25,000 plus 2,500. That is what should be given. System accommodates it, and this is how we have to report it also under GST. So this is a key concept called as,
customs duty, they are claiming reimbursement.
Yes.
Some IGST on import of goods. So how do they take credit?
In case of customs duty, the document that they are giving to you, as a proof that they have paid on behalf of you, is the bill of entry. Bill of entry would have been filed in my name only, with my IE code. So I am becoming entitled to take the input tax credit based upon that. Rule 36 says, bill of entry is a valid document for me to take input tax credit. All this fellow has done is only he has filed a bill of entry and subsequently made an online payment. So he still stands as an agent. I get input tax credit on that IGST. That doesn't get hampered because of this. The other important condition on pure agency, which I forgot to tell, is that in case of a pure agent, he should not be only acting as an agent, meaning he should not be only doing 4,25,000. There should be his service plus he should be doing such reimbursements also. If he is doing only reimbursements, he is not a pure agent. So in this case, the example what I gave you is the fitting example of 25,000 rupees being his service value plus 4,25,000 being the reimbursable expenses value, which is what he is supposed to do as a pure agent. Rule 34, as amended till today, what it talks about is, it talks about the rate of exchange to be adopted. The rate of exchange will be of consequence when it comes to tax liability calculation, as he asked earlier, IGST on customs duty, if you are liable to pay. I am getting a foreign supplier invoice. What rate I should convert it and book it for the purpose of GST? So what way does it matter? Anyway, customs department will have their own rate, CBIC notified rate, which they will use. This is okay in case of goods. But Rule 34 says you must only adopt a rate which is notified by CBIC. The earlier CBEC has now become CBIC, Indirect Tax, Central Board of Indirect Taxes and Customs. Earlier we used to call it Central Board of Excise and Customs. Now it has been renamed as CBIC. That rate notified by the CBIC only, we should use it for converting it into Indian rupees. As I was saying, in case of goods, it may not bear much of a significance. But when it comes to service, it is very critical, because in case of import of service, we are liable to pay GST at a reverse charge. Best example is royalty. My head office is asking me to pay royalty at the end of the year. That royalty amount is in US dollar. How do I convert it into Indian rupees? What rate am I supposed to adopt? Now that also department has given a clarification saying, use either the CBIC rate or they are giving a slight leeway only for services. What you can do is generally accepted accounting principles. In other words, AS11. What AS11 prescribes you, allows you to take it as a rate, that rate you can adopt, which is allowed because your liability will be arrived at only after you multiply and find out the taxable value. Then only you will calculate GST of 18% on that or 12% on that. Hence, in services, this rate of conversion, reference to Rule 34 is critical. The last one is on Rule 35, which is the last rule in GST relating to valuation. Again, in some of the cases, what might happen is assessee might get full money or he will invoice without GST. In those cases, how to arrive at the taxable value and the tax value? The regular practice of assuming that this amount is inclusive of tax is what we have to do. So, if somebody takes an advance for a service of 1 lakh, we should not be saying you give advance of 1 lakh plus GST. Whatever he gives is advance, that's all. We cannot also say that he gave me only basic value, he didn't give me GST. No, that is also not right. If you receive 1 lakh is the amount that is including GST. So what we need to do is 1 lakh into 18 by 118 will be your GST, or 1 lakh into 100 by 118 will be your taxable value. That is how we have to arrive at the GST liability as prescribed under Rule 35. So let's quickly do a small example which is part of the material. That is, A Limited, Chennai, transfers goods to its own branch in Kochi. Stock transfer value is 1000. The open market value of the goods is 1500. Cost of manufacture plus 10% is 1100. Resale value from Kochi, whatever price at which he sells, is 1200. Scenario 1, Kochi branch is entitled for credit. Scenario 2, Kochi branch not entitled for credit. What should be the taxable value? Finally, I am making an attempt to pick you up. I can also give you a good news that the session is almost over. We have only one more slide, which in all probability could be a thank you slide. So any numbers to support your view, though it is very strong and silent?
The market value in both cases.
So in this case, the stock transfer value I am doing it at 1000. So department is never going to agree to that. What they are trying to find is scenario 1. Kochi branch is entitled for input tax credit. Now remember the second proviso that I spoke about in rule 28. If the other party is entitled for input tax credit, whatever value I transfer should be adopted. But second scenario, which is not entitled for input tax credit, then not less than 90% of the value should be taken, which means the price at which I am selling it is 1200, not less than 1080. I should have billed from Chennai. So that is the key here. Okay, we have one more illustration, then I think the last slide will come. A Limited sells electronic goods in wholesale and provides discount of 10,000 rupees for purchases over and above 1 lakh of any electronic items in a month. Can the discount be claimed as a deduction for payment of GST? Yes? No?
The term should be clear at the time.
At the time of sale.
Now, first point we have to go. We have to go in the first point and say, is it given at the time of supply or post supply? He has already given that if you buy from me more than 1 lakh rupees, I will give you discount, which means it is given on the invoice only, no? I go to Ratna stores, they say buy 3 AC, take 4 AC. That means I know that 1 AC's worth is going to be given to me as discount, which is given at the time of supply, absolutely eligible and can be taken as deduction from the taxable value. So as I assured, successfully we have come to the end of the session. So what I can do is maybe sit there and hope that you will ask me some questions which I can answer and take up those questions.
See, certain hotels are offering discounts for special categories, students or senior citizens. The discounts, we have to reduce the GST or without GST.
If the discount is given at the time of billing, when they are raising a bill,
When we are booking online, we are paying 1,500.
okay,
They are giving 150 refund.
when you check in,
Checking.
then that technically comes under the discount which is after supply.
On the time of booking, the actual service supply happens only on time of booking secondary. But we are paying the money advance.
Correct. See, there are two things here, sir. The time of supply as per section 13 happens at the time you make the payment. He is liable to pay GST. There is no dispute on that. The value at which you would have paid GST, which you would have collected from you and paid to the department, is the gross value. He is refunding some money to you when you are checking in, which if he had communicated at the time of booking itself, if he had communicated that printout which you will be able to take, it contains that if senior citizens are going to be there, children are going to be there, that you will be entitled to a discount of so and so. He can give a credit note when he is refunding the money. That credit note can be set off against this invoice, which means overall his liability will also come down. You would have also paid a lesser value and lesser tax. That is how it should be handled.
More related to it.
Yeah,
Complimentary breakfast.
complimentary breakfast, yeah.
See how to value this. They charge on 1,500. It is wasn't at 1,000.
No sir, complimentary breakfast, there is no need to value is my view. The reason being, it is a composite supply. Even if you call it as a mixed supply, I don't have an issue. The reason being, composite and mixed, the only thing that splits these two is when it is naturally bundled, when it is not naturally bundled. I always feel that if you stay in a hotel in a resort, which is 30 kilometers away from Kodaikanal, I cannot wake up and come to Kodaikanal and eat. The whole idea of holiday will be ruined. Or I might be eaten by some lion or tiger on the way. So I will become a breakfast, in search of a breakfast. So it is better that they give me breakfast. So it is naturally bundled is what is the view I will hold. And the price of the breakfast is very much included within my price which I paid for the resort. The 4,000 rupees per night which I am paying includes that value. So there is no need for us to do a separate valuation unless it is a related party transaction. If price is not the sole consideration and buyer and seller are not related, department cannot question it. But if such is given to a related person, then we have a problem. We have to find out what is the value of the whole supply. Then we may have to dig into the details. But if it is given generically to all my customers, it is a composite supply. You don't have to value it separately, sir. There is no need. If somebody takes a plan saying that I don't want breakfast and gets a lesser rental, it is a proof that it is already included there. And when they come there, they suddenly feel, okay, let me eat here. and they pay for that. They pay with GST, in my restaurant. So that way the government is not at loss.
These valuation rules applicable for transaction between the landowner and the builder in the case of joint development.
Yes, 100%. There are few nitty-gritties. I'll just introduce one or two. The first one is, who has to pay GST? There are two services actually there. In a Tamil Nadu context, I'm not deviating much out of Tamil Nadu. In a Tamil Nadu context, what we generally do is, the joint development agreement is entered. Based upon that, the land only will be given to that fellow for development, the developer. Subsequently, once he develops, what he needs to do is, he has to give me some apartments which I can sell. Now the question is, who is giving away what? The landlord is giving away the land? No. I am not giving the land to my builder. I am only giving a development rights to the builder, which is a service taxable under GST. In exchange of that service, he is giving me construction service. An existing apartment he is creating, which is construction. That construction service is giving to me two-way exchange of services taxable under GST. In my view, the landlord is also liable to register, the builder is also liable to register. Both of them individually are liable to pay GST. But it ends up that one fellow will get both input tax credit as well as liability, so it will get knocked off. Only 118% will go to the government. We will have to work it out. I am hoping that tea would have arrived, isn't it, sir? So that is a nice cube. Yeah.
Thank you, sir. I am Ramakrishnan. Yes, sir. Thank you for giving us a nice presentation. And one more thing.
So I'll also thank all of you for being patient and hearing for so long. As I said, tea is ready. Let's disperse, have tea, and Prasanna Krishnan sir will take you through, I think, exports post the session. Thank you.
Good evening, friends. My name is Mani Kumar. I'm a retired person from IBM last year, new to GST. May I now request Mr. Prasanna Krishnan to come to the stage. Actually, if I start reading, I think the session will end. So he has got so much in his contribution. Just quickly, let me briefly tell about him. He is a GST expert and also a customs expert. He has been appealing in customs, excise, service, tax appellate tribunals and appellate authorities, and also VAT appellate tribunals and the GST authorities. He has done a lot of representatives of government. In fact, I also saw about two related to GST, which I request Prasanna Krishnan to just explain us. It's very interesting. I think he has got an affinity to this Bus Owners Association. For them, I think he has done, he has made representation to government, I think, which he can also dwell upon. He has also done, in 2007, non-star hotels in Tamil Nadu. He got a notification for concessional rate of LPG, establishing their business to be a manufacturing activity. And also, again in May 2007, he has also done a rent a cab operator service and concerned engineer service. For the service tax, he has recommended some concession. This is about the main thing which I already told you, that GST, I think he will explain to us. As regards knowledge sharing, he has been regularly giving lectures in Nation, CNAG, RBI. He has also taken a lot of training in ONGC, IOC, BHL. He has also handled our institute CPE seminars regularly. He is an active member in GST study group. As regards his, he is a regular writer in various dailies like Business Line, Excise Law Times, the industrial economist, service tax review and the Economic Times. He has also written a lot of publication. He has also made a lot of publication to Institute of Chartered Accountants of India. Last but not the least, he has given a lot of interviews and participated in a lot of discussion in various television programs. So, as I said earlier, especially to the indirect tax, especially GST. We welcome now Prasanna Krishnan to talk on export with the related GST. Thank you.
Learned brothers and sisters, good evening. Good evening.
Good evening.
Thank you. Yes, 5-6 hours of marathon classes, and subject is also a little heavy.
Started from yesterday.
Yesterday, sir, of course. No, today's count only, I'm just saying. No carry forward. So, after hearing my lecture, if the response is this way, that's fine, okay, I can understand. That's not a problem at all. It's a right response, okay. That's what I can expect. Before hearing itself, if it is a response, I'm a little worried actually. What is this? Something is unique actually. Okay. You know, exports under GST or GST impact on export. Very interesting topic actually. Much often this is referred or this is discussed about with a lot of wrong inputs actually. Very interesting actually. I don't know why. A lot of what I can say gossips, wrong stories, assumptions, some kind of presumptions. All these things are roaming around here and there about this particular subject actually. One of the very fine subjects, not having that much complications as it is said to be, having a lot of clarity than what has been propaganda is going on totally different one. Now before going to that one, we'll spend about some 10 seconds each on next 2 slides. After GST, export has become very complicated one. Export industry has come down. The export is not doing well. All these things are all the comments. This is official information what we are able to have from Department of Commerce and Industries directly. Post, verified, tested. Latest information up to April 2018. You can just see there is an upward movement of 7.13% in INR terms and 5.09% in US dollars terms. It's an upward movement comparing to all the years actually. There is a movement actually for this particular period actually. And you can see that in the month of July and in the month of October there is a dip. You please remember this scale is starting from 22,000 US dollars in millions. I just left the part of that because of that much big screen I don't have. So it is only a relatively an upper part only what we are seeing, and it's a very lengthy one. Big achievements are continuing there. And if you want to see the trend, the next 10 seconds what I requested from you is this. You see the average trend and where the real achievement is there actually. You don't have any big dip or so. Mostly it is maintaining the trend. So beyond all these odds, our exporters are doing well, very sincerely, with a lot of pain and things. Maybe there will be so many changes, monetary changes, foreign exchange rate matters, political, economic, so many things. Things are going well. So if that's the case, because of GST, there is no dip and all in the regular business what's said to be actually. But inside the GST arena, what are all the issues we are facing as practicing chartered accountants or accountants who are serving to some organization with which we are affiliated to in any manner, including as an employee? What's our responsibility to know certain basics is the question actually. The discussion what I'm going to have for next 1 hour and 5 minutes will be focusing on all the major aspects which we need to definitely know without much compromise. There will be certain aspects which will slightly be going in depth, but we know the limit. For beginners, up to what we have to go, we know very well. There we can stop and then come back. For some reason, some of you are having some questions to go in depth. You can just always feel comfortable to ask. Please don't wait for the neighbor to ask actually. You please ask, your doubt will be clarified. Before going to the subject, a well-known story, I'll just quickly share for next 30 seconds and then get into the discussion. Maybe a well-known story. It was a French couple, aged persons, living in the outskirts of Paris. It's a very small village actually, not much people were there. This aged gentleman is living with that French madam for more than about some 4 decades plus. The problem with madam is her hearing capacity is very poor. She was not able to hear properly. And this aged gentleman, over time, he is also becoming, how many days he can shout and express what he wanted. So, one fine day he decided to go to the doctor, got it properly treated, surgery was completed. Doctor confirmed in Paris that, yes, tomorrow morning remove this bandage and stitches and all, she will be able to hear normally. Don't worry about it. From tomorrow your life is totally different one. You happily go. Our gentleman came back. Next morning, hall. In the main hall, our gentleman is sitting there and reading the newspaper. He's just asking, honey, can I get a cup of coffee? No response. Honey, can I get a cup of coffee? No response. Honey, can I get a cup of coffee? Still no response. What happened? Whether this doctor is really educated doctor and properly trained doctor. He said that the surgery is successful. What happened there? He was little irritated, little unhappy. He was about to move towards the kitchen. By the time, ma'am was coming out with a cup of coffee in her hand with a little furious face actually. And she came very near to this man, much near to his ears, and just very clearly told, you stupid old man. When you call for the first time itself, I told that I have some urgent work in the kitchen, let me complete and come. For the second time when he shouted, that also I just told that, yes, I am coming. For the third time also I told, still you are not able to hear. What's your problem? She asked. That day only this man came to know that our gentleman is also having some problem in the hearing. It is a little partly, that is totally. Now she has got clear. So the problems are only relative. The knowledge level is also only a relative term actually. So you please don't expect that if your neighbor is to ask, let him ask. Much more than anything else, the real problem here is in fact he will also be or she will also be waiting for somebody to ask actually. That's a problem really. So somebody will be asking. So your doubts you please directly ask. It will be more easy for us to discuss actually. Secondly, what are all the sections we need to know? Let us not think that it's a very complicated subject with so much sections. Hardly about 7 sections. That's all we are going to discuss in the 1 hour. In whole 1 hour 5 minutes, such a learned people you are, just 7 sections. Just nothing more than that. And that also not that much big actually. Less than some 4 to 5 lines, that's all. In sentence, 2 sentences per section itself will be big actually. So let's have a quick look on section 11, section 16 of IGST Act, read together with section 2, subsection 5, subsection 2, subsection 5, 6, section 2, subsection 10 and subsection 11. And also a little 96A, rule number 96A, that's it. Very comfortable. Nothing more to discuss in detail actually. So if this is done there, and a lot of practical matters are there to know actually. That's all. So it is going to be very easy learning, which I can very much assure you. We can just get into the subject. Section 11 of IGST Act. Sir, you were to start something about export of services, export of goods. The screen reads that the place of supply of something like place of supply and all different one we know very well, sir. Why we are discussing something about that? You know very well, place of supply is the only section, relevant section, or place of supply related section is the only section which is deciding whether something is exported or imported. So now if you are able to see here, you will be able to see that the place of supply of goods in case of import shall be location of importer, where the importer will be in India. So naturally, India is a place of supply in case of imports of goods, so taxation will be here. Export of goods, what will happen there? Location outside India. So in case of exports, in our discussion what we need to note is, when we are exporting, goods are reaching to a place outside India. So place of supply is outside India. Very simple. So goods are going outside India. That's all the thing. Now, having discussed this particular point, let's have a quick look at section 2, subsection 5 to know about export of goods. Export of goods, section 2, subsection 5. Regular definition. Export of goods with this grammatical variation, cognate expressions means that up to that it's all not needs means taking goods out of India to a place outside India. Taking goods out of India to a place outside India. So what is the need for repeating this same sentence for 2 times to a learned gathering, as if something has been read by you as a big prose or something like that? It's a normal sentence, taking out of India to a place outside India. What is there to stress 2 times? Are you able to see something new in the encircled part? Taking goods out of India to a place outside India. Leave on the other part of this text actually. What is there within the circle? Do you see something little new or something is having some importance? Taking, yeah, taking.
From India.
Taking out of India. Fine, okay. What is this showing us? Something little different actually. What do you see there? Little unique, little important, little not so regular, or something little abnormal. Let us say something. What is there actually? Do you see something little different?
Taking less in India.
Uh-huh.
Taking good side of the word sending, receiving, taking.
Physical movement of goods, basically, yes. Physical movement of goods. Okay. By just saying that physical movement is insisted upon, what lawmaker is trying to convey, sir?
There's no consideration which is there. That's not a.
Yeah, that is one part, sir. That I will explain also, how it is matching that now. Leaving that alone for the time being, this particular words,
Made in India.
not so.
Manufactured in India.
No, you can buy from China and in turn again to export to Africa. That's possible, okay. But there is some kind of importance for these words actually.
Originate from India.
Yeah, naturally. That's what I'm saying. Okay, we just hold this discussion for a while. I'll just come back to the same points after a discussion. I want you only to answer actually. We'll discuss. Then, section 2, subsection 6 is talking about export of services. Export of services means, fortunately, this definition is very exhaustive. You need not think there is an inclusive definition saying that first this, inclusive of this. That's not the case. Means, that's all. You do have only 5 conditions cumulatively. That's very important. Even if one is out, you are not doing export of service. If you are just saying affirmatively the answer for all the 5 conditions, you are comfortable. Let's see one by one. Simple things. Supplier of the services is located in India. Very normal, sir. This is very simple expectation by the lawmaker. You are in India. Yes, you should be in India, but then only you can export out of India. Right, fine. The recipient of service is outside India. That's again quite normal. From here to Kashmir, if I am doing a service, can I say that I am exporting? No. Sometimes the situation will be looking that whether Kashmir is forming part of India, whether it is in India, that is all different. Okay, let us not go politically. We will just simply, at least geographically and political map wise, let me talk. If I am doing some service to Kashmir, can I say that it is exported out of India? This is after all India. Fine, okay. It's an inter-state transaction. But what lawmaker says is, you should be in India, supplier. Your recipient should be outside India, recipient. Then, the third point what he is saying is, the place of supply should be outside India. You know very well what the place of supply related provisions are talking about. Especially section 13(1)(3) of IGST Act, if you go through, regarding the export of services, detailed set of information available there. About some 13 plus transactions in case of event, what is outside India, in case of boat, yacht, immovable property, transportation of services, regular services, any other things what is not covered here. So many things have been listed out. What is the place of supply in the given situation? It reads very clearly. So, such a place of supply, if it is outside India, then you are complying with the third condition also. Conditions continue. Fourth condition is, in case of payment relating to such services exported by you received in convertible foreign exchange, then you are complying with the fourth condition also. Within the time given by the regulator. Reserve Bank of India, 1 year time it is giving, 6 months plus 6 months extended. So you can bring the money inside that. Fine, that is also. Then the fifth condition comes, little unique, no doubt about it. It says, you, the supplier, he, the recipient, should not be merely distinct person just because of provisions of section 8 and explanation 1 therein. What section 8's explanation 1 is saying? See, I have an head office in Chennai. I do have a branch office at Bangalore. The same are of same company, a private limited company. Head office at Chennai, branch office at Bangalore. Can we say that Bangalore branch is totally a different person? For limited purpose of this law, yes. Okay, what is this? That is a branch you are saying, this is a head office you are saying. How you will say that is totally different person? A distinct person status is given there, one, geographically in a different location of a state, they are there, and in some other different state, if another office or location, another office or agency or any type of business setup is there in another state actually. So if that's the case, for limited purpose of law, he will be a distinct person. Sir, I am not able to get convinced. This is a branch you are telling. I am a head office here, you are saying. I am an head office with the same PAN number. That another branch is also with the same PAN number doing activities. I am the board of directors. We are the directors in the board, and the same directors are controlling that. What I am not able to. How it will become a distinct person? It will become distinct person. That's what the provisions are saying. Within the state, you can have so many branches. For limited purpose of for the purpose of this law, under one registration, you can bring everybody into one number. Fine. One GST is enough for you. If you want business vertical wise, so many registration also you can do. That is different. But whatever you would like to or you would not, your Bangalore branch is a distinct person from Chennai branch. Your Vijayawada head office is distinct from your Cochin branch. Your godown at Delhi is different from the one at Lucknow. They are distinct person. Okay, sir, with a lot of explanation, you are trying to establish that they are distinct person. Because of that, what is the problem for me? Let it be. What is that? What the big difference it's going to make? It's going to make. If you render service to your branch, you need to raise invoice. If you send your goods to your own head office, you need to raise invoice. Can you please come again? Are you talking about invoice? To my head office, to my branch office. What is this? From invoice, if I'm from one head office to one branch, if I'm sending, what kind of big trade activity is happening there? My stock is moving to another place, that's all. What more you are expecting there? Or if I'm doing some service, so-called service, if any, what am I going to do? It's only my branch. In which way I can raise an invoice or something like that in this matter? That's what I am telling you, that the concept of GST is totally different. It's always advisable to totally relearn, unlearn certain things what might have been there and start learning or relearning this one. There are certain matters, other things are all settled. Not that blindly everything is a heel over the head actually. All basics are always common. There are certain differences that I will just explain. Coming back to this one, I just told that you are not just a distinct person of the same legal person and you are not claiming an export or service. That's what I told. In other words, my Chennai office may not be able to claim that it has made an export of service if it is doing something to my London office. Or my Vijayawada head office cannot say that it has rendered any export of service to its own, let me say, branch office, head office at Washington. No, you only told that they are distinct person, then you are saying that they have not done export. No, I just told that they did a service. I never told that they did an export of service. To do an export of service, they should be totally two different legal persons, not distinct persons. So in other words, within India, one branch to one head office is a normal transaction. Treat that as a normal transaction only, subject that to normal taxation, GST. Whereas, if you talk something about the export of service, please don't try to bring in a theory that head office in India has exported something to branch office in Canada, Toronto, or the branch office in Delhi has exported something to Uzbekistan branch. Not possible. There is no possibility of any export of services from here to there. That's not workable at all. Service is not possible to be exported between the same legal persons. So let me ask one more question. My holding company is there in US. My subsidiary company is there in, let me say, Thiruvananthapuram, Kerala. So if that is the case, from the holding company to subsidiary company, if some transactions are there, 100% held. 100% held as a subsidiary. Okay? So what will be the reply is the question. What is your reply? Head office, branch office, store and all over. Holding company, subsidiary company. Holding company is there, let me say in maybe in Cuba it is there. And it's a branch office, I don't know for what reason, they are having at Thiruvananthapuram. Some reason, they have their commercial reasons. Cuba holding company and Thiruvananthapuram subsidiary company. This way you keep it. Instead of head office. What would you like to say? Cuba, separate company, holding company, holding 100% subsidiary, which is situated at Tirunelveli. There is an export of service by subsidiary in Tirunelveli to holding company in Cuba. Is there export or not? Export? Anybody is disagreeing? Okay, that's all the thing. Because they are legally identifiably two different legal persons. In the first case, what we saw is the same persons, two entities. They have maybe head office and branch office versus godown, branch office is warehouse. It's all different. The next case, what we are saying is two identifiably separate legal persons. Whatever you say, holding company, subsidiary, that's different one. They are having their own legal existence and entityship. So in that sense, it will be there. Now we will come to a little more core part of the discussion. In case of exports, whether GST is applicable. If it is applicable also, how it is zero rated? People are saying of something about zero rated. Where is that zero rated notification? What is that meaning of that one? Somebody says that section 16 is the very backbone of the entire study of this one. What is the meaning of that one? Is a question. Now, this is what entirely section 16 reads. A small explanation is that, leave it. That's what the main part of that. The fine text itself is this much only. Zero rated supply means, it's not again inclusive, very clearly means, that's all. First limb, second limb, finish, that's all. Read 2, there is none. Any of the following supplies of goods or services are both, namely, export of goods or services are both, supply of goods or services are both, to SEZ developer or SEZ unit. So a regular export of goods or services are both. That's normal. That is also zero rated. What you are supplying to your SEZ unit, SEZ developer customer, is also a normal zero rated transaction. Zero rated transaction is fine. That's okay. SEZ is also in India. SEZ developer, SEZ unit, whatever it is. Whereas a foreigner is totally in the foreign country. Whether both can be zero rated? Yes. Both can be zero rated. That's what law says. Both are zero rated only. Very clearly it says. Export of goods, export of services, both definitions we saw. Section 2 subsection 5, 2 subsection 5, 6 we saw. Now when it comes to the supply of goods and services are both, I will just draw your attention to a particular word. Because when you read the law, much often, some of the words will not attract your eyes actually. So maybe this kind of seminar discussions and all will make you to be a little more keen towards that. It will be giving you a little more comfort level actually. Because that's where the problem really comes. Lawmaker language is totally different one. In the world, several languages are there. Spanish, English, French, Tamil, Telugu, lawman language. That is a different language. They are separate species. They will be given a separate birth by God. You be a lawman in this birth. That's all. He will become a lawman. He will talk in his own style actually. And the way in which he is talking will be perfectly right. Maybe you will be having some difficulty to understand. He will be rightly talking. That's a problem actually. I just called a very learned officer of North Block, let me say somewhere by 5:30 or something like that, after office hours, unfortunately, of course. He attends a phone call. Yes, sir. No, sir, I'm so. Yeah, we are from Chennai. Yes, please tell. Sir, there is some serious problem about GST implications, certain matters actually. I have to send a mail. After informing you formally, I have to send a mail. Shall I do this? I am going to mark a copy to so and so, so and so. Is it workable? Can I do it? I'm sorry to disturb in the non-office hours. Yeah, no problem at all. It's not office hours and all not there. Even up to 12 o'clock we are sitting nowadays. Midnight also. Not a big deal. But today, I come out for shopping with my brother-in-law's only sister. I will just call you later. Oh, fine, sir. I just put to the woman. What he is talking about? Brother-in-law's sister. Such a relationship we have never heard at all. Brother-in-law, okay. His only sister, my wife, whackhead. He should have told that I have come for a shopping with my wife. What the problem with this guy? Why he is talking so? But technically he is right. Yeah, brother-in-law, sister, only sister is who? Only wife. That's all. That's normal. But that is how he will talk. So you need to understand. He is very carefully telling something. I don't know why he is so carefully saying something. Whatever it is. Now, if you see the screen, you have read this, right? Now have a look on this. Is it giving any hint to you? Like some time back what I showed. Sir, with bare eyes everything is looking normal only, sir. You are only creating some problems, sir. This is reading very normal. You are putting some circle here and there and saying that, is there anything available to your eyes? Is there, you are able to see something else? But nothing is there, it's reading normally. What you are reading abnormally, you don't understand. No. Your comfort level can be very much maintained. You don't worry about it. There are certain things about which I have to talk and gain your interest actually. It's my job actually. Please just have a look on that. You have it, you know it. I am trying, it's only a process of you coming out. I am very sure that you know it. I am just trying to facilitate the process actually.
In that statement, it is not mentioned clearly that is export. Taking out. Whether it is out of country or within the country, it is not.
No. As far as SEZ is concerned, certainly inside countries, no doubt about it. Okay. And the word TO is in a circle actually. 2. What is the importance of this? Please come on.
Developer has to buy. The developer selling is not.
That way you are telling. No, that's okay. That is naturally because developer if he is selling that the goods are coming into India, it will become an import process. That's okay. There is something little serious about this word actually. You are able to get anything about it? You feel comfortable that just because in a beginner's session, if you are not able to come out even after some 2-3 chances given to you, you are feeling uncomfortable. No, that's okay. Nothing wrong in that actually. As I already told you, layman's language is totally different. You need not be much worried about it. Your English is a very fine English. Renan English actually. Their English is totally different. You wait. That's not a problem. Just think in this way.
See, alternative word may be for.
For.
For economic special.
Now I will tell you this way, sir. I will ease the process. My brother says a hint actually. Rather, I will put this way. Supply of goods or services are both in a SEZ. If it is reading, what is the meaning of that? To a SEZ, what is the meaning of that?
So the supplier should be outside the special economic zone.
Good. That's basic actually. Okay, naturally. That's basic. Yes, no doubt about it. Okay. That's true. Part of that is there. Some more refinement is required. Okay, right. Now, I'll tell you one thing. If I supply to SEZ developer, I am doing export. Right, accepted. That is a zero rated supply. If I am supplying to contractor of SEZ unit, is it still a zero rated supply? Why not zero rated supply as per this definition?
Developer.
No, you come in. Yeah, you are mostly on the point actually. Come on, sir. Yes.
Specifically to the developer.
The section very clearly, without any compromise, reads that if the zero rated supply is to SEZ developer, to SEZ unit, then it is zero rated supply. It may be really meant for SEZ developer, maybe really meant for SEZ unit, but just because you are rendering service to some, or if you are supplying the goods to some contractor, in turn who is going to really supply to back-to-back contract, no doubt about it. Okay, but that doesn't mean that it is still falling under the zero rated supply, because law is clearly saying that we want to see that the supply is happening there to SEZ. You do your supply to SEZ, you claim that you exported. Whoever is doing to SEZ directly, let them claim. It's not telling that maybe for this kind of words and are not there. It says that to. Let the supply be to SEZ unit. Let the supply be to SEZ developer. That's what it reads very clear. In that sense, it's making the point very simple and also clear that only when you are having a direct supply to SEZ unit or developer, you can claim that you are doing a zero rated export. Otherwise, you cannot claim that. Right. Now, one more question we have to ask. Simple question only. Again, the answer is also simple, little lengthy only. As an exporter, one should pay IGST or not. An exporter, whether he should pay IGST or not. No. Why?
Because he is getting a zero rated supply and he is exporting it. So since he is not paying paying any tax to his supplier, he will not also pay any when he is exporting it.
No, what I'm asking is, if that is the case, is he safely exempted? He is not having any liability at all? Ab initio, he need not pay at all?
He has a liability.
Other than this,
Sorry?
as of now it is zero.
As of now, it is 0. Oh, fine.
He has a liability.
Ah,
The export under LUT.
export under LUT should be there, or else,
He can export without payment of tax.
if he is not having LUT, you will be asking him to pay the tax.
Yes.
Alright, that is another reply. I think partly you are accepting that also. Now we will quickly have a look on this. What kind of export related taxation is there in our GST regime? A simple explanation is here. Exports can be of two types. As my learned sister told, you may be having letter of undertaking route in which you are doing this. Take a letter of undertaking, we will discuss in detail what is LRT. Letter of undertaking, and then you can, without making payment, you can do it. If you are not having letter of undertaking, you are not complying with the conditions of the rule, then you will be going to the payment route. Payment route means pay the IGST related to that one and export the goods, prove to the officer subsequently that really you exported goods or services, and take back the refund. And now what is the situation? So much things have gone there. Here number one, this is not there here. Earlier it was. Again this is also not there. And in other words, without these things you get letter of undertaking easily nowadays. Till October end you did not have this situation. Even in the November second week yes, also you had a lot of issues. A lot of other things happened there. In the past what has happened there, we will just briefly talk in 30 seconds. But sir, I have a doubt. I am a beginner. Why I should know that what happened in the past? Today what is the problem I should know. Why I should be worried? In indirect taxes, if you want to do something productively and effectively, first thing what we have to note here is our knowledge as to the past as well as present should be very strong. Because your client is a person who is very unique creature. He is sent by God with the extraordinary kind of characteristics actually. So he will come after spoiling the case totally after 3.5 years. And he will not tell something what he has to tell to you. He will perfectly tell with all possible arms and ammunitions to the officer. He will write everything in his website. He will not write even a single word by mail to you. The one what you want to learn can easily be learned from his website and from his catalog. But whenever you are discussing officially and professionally, he will not tell to you. So these are all the problems which are there, which is universal. Few good and exceptional people are always there. Nice clients are always there. That is different. Now the problem here is, if you don't know what was there in the month of July, August, September, you will be in trouble at the time when you are facing some kind of query, question, litigations and all. What was there? What was the circular 2/2017 on July was telling it? Subsequently, what happened there? So a lot of things have happened there, read together with Rule 96A provisions actually. Briefly to tell, at that time there was a situation where the government was telling that if you are having a very good track record for you, 1 crore rupees minimum foreign exchange amount you brought inside, INR value 1 crore rupees worth foreign exchange you brought in because of your export activity in the past, which is not less than 10% of your total turnover. We are ready to believe that you are having a very good track record. Proving this to the jurisdictional officer, make us RFD 0, 1A, RFD 11 and the letter of undertaking and all presented. Our officer, without asking much queries, after seeing your records, he will process. And he will give you a letter of undertaking, acceptance letter to you. If not, you need to pay bank guarantee, you need to give bond amount, you need to give bank guarantee, something like that they told. It's all in July, August, September. Slowly they diluted. After knowing that the refund process is getting much delayed, they told that, fine, we don't want to block your working capital, it's too much. You need not pay any kind of fixed deposit or bank guarantee and all. Free of cost, you can get the letter of undertaking. Maybe in only somewhere by December only, it got settled actually. You started to receive the letter of undertaking, of course, manually. So that way it was a little good development actually. A lot of things had been there. Procedure wise, you have to give in manual form and they will be processed these details and all, and then they will be giving the detail and all. It's all happened there, all old stories. Now, having seen all these developments, of late, from March 2018, what's happening there? It's online. Just go to your website, gst.gov.in, use your login, go inside, select the services. Under that, an option user services is there. Beneath it, LTU related option is open. Just click it. This is what the process we are going to carry out. I'm going to tell you a very important thing. You do 5,000 crore turnover also, maybe in goods or maybe in services. Your letter of undertaking is going to be done by you this way only. Simply open the website, do these things, services, under that user services, under that letter of undertaking. When you go inside, already pre-filled things are coming out. Your name, legal name, GST number, all these things are all pre-filled. Fortunately, if you are already having, incidentally, if you are already having your manual LUT of 2017-18, scan it and attach it with the prescribed size. If you don't have, for the first time only as a chartered accountant in practice, I am going to do some export of services, I am going to render some service to SEZ, I want a LUT, if you say, or your client is doing some export, you want to do, if you say, that also is not there. Everything is pre-filled, you are going to just see that, okay, pre-filled, okay, thank you, next. What is next? Click. Click. So, here one screen. So, you go there, 10 seconds you punch your password, username and all. Go inside this, click here, 2 seconds. Click user services, 2 seconds. If you are a little slow in clicking, add another 4 seconds. So, then you come to the option LUT. Therefrom you just go to this screen. As I already told you, everything is pre-filled. You are not having anything seriously to do there. There is only a small column for 2 witnesses, name and address of the real witness. Somebody should be really alive actually. So type their name and address. That is what the name of the witness you say. Just click this. Then you will be able to see this screen. Acknowledgement. What acknowledgement? Acknowledgement for LUT. It is generated with an application reference number, AR. So more or less in the 70th or 80th second of your entire process, you see the screen. Less than 2 minutes. Preparation of noodle is also requiring 2 minutes time as per their own promotions actually. Less than that time only you will be requiring, you will be able to see that this is achieved well. That's all, nothing more than that. You will be able to see this screen. So these are all fine, okay. But you told that some letter of undertaking or acceptance letter should be given by the officer. When that will happen? Should we take out the printout and all and go and meet them? Not at all. Okay. Then what is the kind of paper we should have as LUT reference and all? This is what. What? This is what? This is acknowledgement, sir. Yeah, this is what is required. That's all. On 6th April 2018, by way of a proper circular, GST circular, the government declared that you need not print any kind of detailed hard copies and other things. Now go to the officer, let him not put a green color signature and a blue color seal. You need not wait for 2 days, nothing required. Spend 80 seconds. Thereafter, prospectively, you do turnover of $8,000 trillion also, you need not pay any tax as an exporter. Simple, nothing more than that. So merely a matter of 70 to 80 seconds. So if it is done in time, you are saving a lot of time loss, lot of money loss, everything, it's safe. Then the next question is, sir, if I am not doing, what will happen? See, this is a typical Indian question. Sir, this is due date. Within this, you have to file. Sir, if I am not filing, what will happen? Sir, this is one way you should not go. If I go, what will happen? Invariably, you should know what will happen if you are violating, or else your head will be broken to 100 pieces. So we should know. Because the client is asking, no, what to do? Sir, if I am not doing, what will happen? You know, auditor you are. If I am not doing, what will happen? You should say, then only you are a professional. Or else we will not accept you. That's the kind of extraordinary society we are having. Right, coming to, we will answer that also. If we are having LUT, 96A is complied with, rule number 96A provision is complied with, you are safe. If you don't have that one, naturally you are covered by the regular provisions. You are not doing you are not strictly doing a zero rated transaction as prescribed by law. So you need to first see that you are paying the tax, and then you need to prove that you have done a real export, and then you have to collect the refund from the department. Why we should pay to him and why you should get the refund from him? You can definitely claim the refund no doubt about it. You can claim. Question is about getting. Can claim, that's okay. How much pain is there in getting refund is always different one actually. So a lot of steps are taken by the department to see that it is with little more ease steps actually. But still the pains are there. Now,
Condonation is there for DA.
there are notifications, there are circulars which are saying that you can take on the situation based stand, you can take case to case basis certain stands. Somebody was so ill, he was not able to come. Somebody went out of country, you could not return. So many personal reasons and unavoidable reasons. Big problem was there inside the board. Nobody was authorized. After some chaos and things and all, went to the court and settled down and came back. So nobody was there to sign on behalf of the company. Troubled time, big riot, flood, this, that. So many things you can tell. But it is not exactly telling that under what situation a delay can be condoned and a retrospective effect of LUT can be possible. The circular is not saying. It's kept open, case to case basis, jurisdiction officer can decide. If you are giving the jurisdiction to officer, if you are giving the discretion to the officer, what will happen, you know very well. Officer is a person who is trained in a different manner. I am also a trainer, part of the scene is to me too. So, he is trained in a different style actually. You go to an officer, you ask him and you say to him with evidence that, sir, I am having an exemption notification which is squarely covering my transaction. No. No, sir, your department itself issue a circular in favor of me. No. Sir, at least a part of this is given as an abatement, sir. No. Sir, you are an intelligent officer, sir. No. What to do? He is trained to say no only because he is trained. If somebody is coming there and telling anything, if you are saying yes, you are an officer. How you are an officer? You have to just go into the detail and just after due analysis only you have to accept. You cannot say no. Just to say no, you should not sit in this case. So he is saying no without knowing that what the opposite party is asking at all. So it is little difficult actually. Maybe we can try our luck. We can see that. Now, this is all about the basics of exports. A smaller portion we have to discuss in addition to this also is merchandise export from India scheme script, service export from India, MEIS script, SEIS script. What is a script? What is script means what? What is that? Where from it is coming there? Which is the department governing this? Who has to go? Where to go? What is this and all? Simple. Director General of Foreign Trade is dealing with these matters. If you are an exporter having established track records, you will be able to prove that you have done transactions in goods, because I am talking about MES. In goods, you have done certain serious achievements. Foreign exchanges come inside India. Based upon that, if you are going to djft.gov.in, there will be one ANF form 3A, Ayat Niryat form, import-export form 3A. You can file it, take the printout of that one, supporting papers you can give. Online applications are available there. In addition, you need to meet certain requirements. You can deal, depending upon the product, 2%, 3%, 5% scripts are given. So still I am not able to understand what is scripts are. Script means what is that actually? In accountant's language we will talk. If somebody is giving credit note to you, what does it mean to you? You received a credit note from Mr. X. What Mr. X is doing to you? He is giving some credit in the books. A monetary value is there for that, right? He has given the effect in his book. You can make use of that credit in any manner between your account to his account, in the current account. That's the meaning, right? You may get back the money, you can adjust the money, against your payable, that credit can be adjusted, something like that, right? This is what is happening there. Government of India is giving a credit note for which name is Duty Credit Slip, DCS. Duty Credit Slip. First duty credit slip is relating to goods, MEIS. A long history is there, we don't have time to go into the details actually. There were a lot of goods, focused market scheme, focused product scheme, market linked focused product scheme, maybe village and Krishi related some VKGUY was there. Gram Udyog Utpad Yojana, that was also there. Agriculture incentive program related scheme script were also there. AAIS was also there. So variety of schemes. Now they are telling in one go, 2015 to 2020 block period of this scheme, FTP scheme is telling this. It reads, if you do this method, what I have told in this way, you will be able to apply for this. Okay, I am applying. They will be giving a script, you are telling, okay, that is a A4 sheet, somebody, a DGFT officer has put the seal and sign, and then it's given. What I can do with the script? It is a credit note you told. Okay, fine, okay, it's a credit note. With that, what I should do? It's a credit note, okay. Credit script, okay. What I should do? I am an exporter. You can make use of that fund to pay your duties and taxes. Sir, just now you told that if you are having letter of undertaking in 70 seconds, 80 seconds, less than the time of noodle making, you need not pay any tax at all. You can get the script on the basis of your foreign exchange achievement, use that for making the payment of tax and duty. Where is the tax and duty? I am not having liability at all. With the script, what I can do? What is the use of this script? Now, this script is not useful for you. Because you are not paying taxes, you are claiming so. Fine, okay, you are 100% exporter, right? Some other person will be having the liability to pay the duty, no, they can use. Sir, having taken so much of pain in 2017-18, I will do a big turnover and get this so-called script by making online and offline application and all. That will not be useful for me. Rather, I have to give to somebody. What is the use of that giving to somebody? Why I should work for somebody and give it to him? You can sell, sir. How I can sell? What is the use of me selling it? When you are selling it, he will buy from you at a price and then he will use it. Sir, instead of he paying to me the amount and using that one, let him directly go to the website, the GST website, or maybe the IceGate website, and let him pay that. Why he should pay the money to me and then use it? Please understand, you need not give this script at 100 rupees. Because as you rightly say, logically it is meaningless. He can pay the 100 rupees directly to the government. Rather, at a discounted price of, very nominally discounted price of 99.75 rupees out of 100 rupees you give me. 99.5 rupees you give me, you can plan. Oh, nice, fine, okay. But I am not getting 100 rupees, you know, I am paying, I'm sad. When it was silently with you, you are not earning anything at all and expiry time will be over. Rather, you are able to sell for 99.5 rupees. Be happy. 99.5 rupees is a bonus to you. Have it. Free. Okay, 99.5 rupees for him. For him also beneficial. If he has to pay 100 rupees as basic customs duty, but he is paying 99.5 rupees to you, you can use it for 100 rupees he can. Perfect. So there is a separate market for these scripts. Whether it is MEIS or the SEIS, there is service exported from India. Because goods wise, if you see 7,913 goods have been listed in MEIS related matter. 2%, 3%, 5% different rates. In services also about some 18 major categories have been listed out there. Under that, each category is having its own kind of SEIS scripts actually. So, if you are able to collect this kind of scripts, you need not use it. You cannot use it, of course, because you don't want. You are an exporter actually. No, sir, I am an exporter and I am having some domestic turnover also. This can be used for basic customs duty payment, anti-dumping duty payment, safeguarding duty payment, central excise payment relating to petroleum or liquor, whatever applicable cases actually, whatever it is, that you can make the payment actually. So for all these things and all, you can make use of. Sir, what about GST? We did not tell anything about GST. Up to September, they prevented. It's true. Really prevented. Only from 6/10/2017, in principle, they accepted that towards GST they can pay. But a lot of practical difficulties are there in setting right the accounts with the DGFT. They are big nuisance actually. Fine. But you have a very good market for this. As I already told you, you can sell back. It's a little lengthy process. It's there. It's having its own pain, but it's a free money. Just as an export, please.
If I sell that script,
Ah.
will it be subjected to tax again?
See, the question is, sir, you only told that you sell at a discounted price, believing if I go and sell in the market, and thinking that 99.75 rupees has been received, oh nice if I say. If suddenly the GST officer comes and says that 99.75 rupees is your consideration, pay the GST for this, if he is asking, I will have to pay 18%, 28% out of my packet, which I did not collect at all by mistake. What is this? If you refer to notification number 35/2017, entry number 122A, capital A, you will be able to see an exemption for this, which is a continuation of notification number 2/2017 dated 28/6/2017. So it is an exempted item. Okay. So for a short while, from 18% to 12%, it was transferred. Then from October 13/10/2017, it's perfectly exempted item. Refer 35/2017 CTR. Then, exporter is benefited by not paying the GST. It's true. He's not paying GST. I told that take an LUT, happy, okay, right. Exporter is happy. Somebody in India is supporting the exporter by supplying the goods. We are talking only about the goods exporter, okay. Somebody is exporting, he is very happy, LUT is there, he will not pay outward tax. If some accumulation of ITC is there, he will take the refund also, because that is provided for him. Somebody is supporting him, we will call him as a supporter, for easy understanding. Supporter of exporter of goods is there. For him, what is the benefit? What is the use for him? There also benefit is there. If you refer to notification 40/2017 CTR or 41/2017 ITR, you will be able to see a very benevolent provision from October 2017. In this, what it says is, if you are a supporter to an exporter of goods, subject to 9 conditions mentioned in the notification, you shall be eligible for supplying at a very concessional rate of 0.05% of CGST, 0.05% of SGST, 0.05, not 0.5, 0.05. Very negligible. Just for control purpose, it is there. Nothing more than that. So if that is the case,
It is possible.
10 minutes. In that sense, what is coming there really here is this. You can supply at a very lowest possible rate, 0.05. In case of IGST transaction, just do it for 0.1% only. 0.1%, that's all. IGST transaction. So this is very nice. As a supporter, I can just at a very lowest rate supply. When I am doing it at a very lowest rate, I have to just nominally collect that amount to commit to the government. That's also okay, fine. Now I have a problem. I am a supporter. As you told, I am supplying to the exporter of goods at 0.05, 0.1. What about my ITC? It is keeping on accumulating. What is the use of this? Here I am not an exporter also. Only to an exporter you are giving refund. No. Here, what you need to note is, law is recognizing a situation of this one, saying that it's the inverted tax structure. Inverted tax structure is the one where, I am using the word very carefully, please follow that. Inward rate of the goods, inward rates of the goods, inward goods are coming to you, no? Inward tax rate of the goods, is high. Outward tax rate of the goods is low. In that situation, what happens? I am talking only about the rate, not about the amount, rate, percentage. You buy for 5%, 12%, 15%, 28% and all as a supporter manufacturer. But you sell because of the compulsion of law or provision of the law 0.05. Then you are in inverted tax structure. You are also eligible to get the refund. You are also eligible. You can make a request and so as a supporter, the accumulated ITC is not waste for you. You can earn out of this. You can take the refund of that. Not a problem at all. Now.
Is there any document I need to get from?
Yes, sir. If you go to 40/2017, 9 strict conditions are there. You don't have time to explain in all actually. It's very simple terms actually. You can just know it. That should be strictly followed, easy to follow. Between a genuine supporting manufacturer and a real exporting manufacturer, this is simply possible. In practice, we are able to see that very easily happening there. You can do it, not a problem at all. Including within 90 days, you should be able to see that let export order is sent there. The material should be identifiably used and sent as such by the manufacturer. You should be having a relationship that he orders, you do, and there is a relationship between the goods what you are giving, and then he should be able to file his bill of export to the copy to your jurisdictional officer from his side. They are all there actually, but you can do it. You can do it. The concept of deemed export is there under section 147. Notification number 48/2017 CTR is talking about this situation. What is this deemed export? Normal export is okay. What is this deemed export? If you are supplying to an authorized, advance authorized party, what is that advance authorized party? You do have a need of copper. You do have a need of, let me say, some kind of zinc. Licensing is done by the import controlling DGFT officer to an extent only. To this extent only you should import and then get a permission also. Beyond the license level, you cannot do, you can again go for a permission. That sense, you can just do it and sell it back, means export back also. But when doing this advance authorization process, you are not going to pay excise to, that is basic customs duty on import, because you are going to re-export. Duty only you don't pay, but as an importer you are paying the foreign exchange to the foreigner, because he is giving input material to you. You have to pay, material should come, right? Foreign exchange goes out. Take in respect of export promotion capital goods scheme. You have to import some capital goods. That capital goods are given as duty-free goods because of the scheme, EPCG scheme. True, export obligation, 8 years turnover and all, later detailed procedures. No doubt you don't pay any type of import-related duty when you are dealing with the capital goods. But please remember, you are paying a sizable amount as foreign exchange to the foreigner. Foreign exchange goes out of the country, right? So in that case also, that is advance authorization, input material you buy, foreigner is getting foreign exchange. Capital goods you buy, foreigner is getting money. So in that case and all, what you are able to see, foreign exchange is going out of your hands. Just to stop this practice, an Indian who is readily with the capital goods, readily with the so-called importable goods for the purpose of advance authorization, is permitted to give it to you without GST. No GST. It will be very nice. So it will be very nice, but what is the use for the supplier? He is just supplying. You are saying no. There, he is given an exporter status. Who? The supplier. As a supplier, GST supplier, registered supplier, if you are supplying to advance authorization, if you are supplying to the so-called EPCG holder, you are given the status of exporter for the export transaction. Sir, exporter status for an Indian supply. Yes, Indian supply. Indian advance authorization holder is buying from you, giving the status of exporter for the transaction. Indian EPCG holder is giving exporter status for you if you are giving the capital goods, supplying the capital goods stream. Very nice. Okay. But by this, what I am gaining, sir? Very nice. You are becoming an exporter just because of your Indian transaction itself. Going to get refund also. Wherever it is possible there. Some schemes are there. That is also possible there. Similarly, when you are supplying to an export-oriented unit, it's in India only, registered EOU, with maybe an export processing unit registered. Your supply of goods, I am talking about goods, your supply of goods treated to be deemed export. Law is deeming that as an export. Sir, you only said that export means goods should go from one place of India to another place of India. It is not going out of India, still deemed to be export only. So is the case of public sector unit and bank dealing with the gold actually. 48/2017 is telling that concept. Last set of few items. I am not getting my refund as an exporter. What is the problem actually? First thing, if you are exporting your goods or services to SEZ unit, please make sure one basic point, they might not have registered themselves properly in the GST website as SEZ unit itself. By mistake, they would have selected that as regular status. The status would have been by mistake taken as regular because it's a very big menu. By mistake, they would have collected. There is a separate mail ID to see that this kind of grievances are addressed duly, and it is very effectively working from the month of April. reset.sez flag@gst.gov.in. The status changing is impossible to be done by any jurisdictional commissioner, principal commissioner, chief commissioner. Nobody can do anything. Only this mail ID will be of only serious use. Other places you cannot do anything at all. Please don't believe anybody. They themselves will be very honestly telling. This is not our work. It's purely a technical matter. The server data is saved by you after your migration or registration. Please take care of it. So it's only the mail ID which will be able to help you actually. With reminders or something like that, you can just get this done properly. This is very serious problem in respect of SEZ customer for you as an exporter. What are all the other problems are there? You don't write rightly the shipping bill number. In urgency, it goes wrong. In the JSON file to be attached in the GST return, sometimes you wrongly type this is shipping bill date. It is reading the format of DDMMMYYYY. But what is typed is DDDD. How it is possible? 013. Why 013? It is reading very clearly. So that may be the issue. Or the port code, which is an alphanumeric number, much often resembling. Cochin code and Kakinada code will be resembling. By mistake, you will be punching through the machine will not understand. Because customs records are reading online that something has been exported by you from Cochin. Whereas your return is reading that you exported from Kakinada. Machine is not able to understand whether Cochin or Kakinada, what happens to this one. It is not able to understand. Your refund is not getting processed. And you punch some data in 31A or 31C respectively of the GST return 3B only when it is taxable and exempted goods respectively. But in case of zero rated, para 31B is the relevant one. The problem here is if you don't punch the data in 31B in return filing, how you can expect the machine to understand? GST return filing is no more a clerical job at all. In this law, you need to be a serious professional to file the returns. Merely using some software given by some company, software company, merely using a one which has been referred by your neighbor or your colleague or a peer is not of any use at all. Return filing is a serious process to be carried out a little more seriously by the professionals only, not by others. This we already discussed. The solution for the problem to be solved here is you do have corrections in table 9 capital A of GST return. If you have done something wrong in the previous month, please correct this here so that in para number 6 capital A, exports will come correctly. In para number 6 capital B, the SEZ related detail will come correctly. You can easily make it up. Please select the option with payment or without payment very clearly. If you are paying with payment, I am doing an export because I am not having letter of undertaking. Option is WPAY option when you are filing. If you don't pay, I am having LUT, I won't pay. Without payment, I will do it, right. WOPAY option is there, please select it. Problem here is, you are declaring to the customs officer when you are exporting the goods differently. Saying that I am having letter of undertaking, I will not pay, without pay option. When you are filing the return, you are by mistake clicking as WPAY, that's all. Machine is not able to understand what this man is doing. To the customs officer, he is saying that I am having LUT. To me, he is saying that I don't have LUT. This man is having LUT or not. Okay, I am totally confused. That's all. It stops. So machine is not able to understand. So, please see that consistently in return filing time, you are closely monitoring all the options, know in detail very well, and then file it. Train yourself well and then file it. And please advise your client that if you do mess in return filing, during the GST audit time, you will be suffering a lot. Because I am the person going to do the GST audit, I may be the first villain for you. So please don't do any mess. Know it, do it. If you don't know, better you get yourself trained and then do it. You please advise them. We are SEZ or we are EOU. Are we having any special provisions or not? Is there any special thing or not? Exporter is after all an exporter. EOU exporter, SEZ exporter, and exporter is exporter. Whatever we have discussed as in respect of exporter is strictly applicable for them also. There are certain privileges and priorities for them under the respective act, maybe SEZ Act 2005. That's all only sundry privileges. All the procedures, all the requirements what we have discussed as an exporter for them are simply applicable for them also. There is no big difference at all. Sir, I am exporting the exempted goods or services. Goods or services exempted. Exemption notification itself is there. Whether it is still a zero rated or whether it is an exempted item. Whether I can claim the GST ITC or not. Please remember, zero is a rate. Taxable rate is zero. So it is a taxable item. Exempted item, when you are doing as an export item, it takes the color of zero rated. Means it is taxable at zero. That's all. 18% goods if you are exporting also zero rated. 28% goods if you are exporting also zero rated, provided you are having LUT. An exempted item normally in domestic market is an exempted item. But when you are exporting it, it gets the status of zero rated. That is again a taxable but zero rated. So what is the use of it, sir? Zero rated or exempted item. Anyway, I am not going to pay. Leave it, sir. What is the problem? No. If it is zero rated, it is taxable goods. You need not reverse your ITC as per the formula given there in Rule 42. Whereas, if it is going to be mere exempted goods, you are having the ITC reversal effect, which is series. It's a loss for you. More the exempted item you are dealing in domestic market, more the reversal is going to be. Whereas more export you are doing, including the exempted item, you are not going to have the ITC reversal. Okay, sir, if I am not reversing the ITC, it will be accumulated or no? It will be accumulated, but you are getting the refund. rating their event. What's your problem? So, being zero rated is a big privilege. Try to see that how you are able to fit factually your case into zero rated. That will be of great use to you. Okay. So, there is already a slip given to me that at 5:15 please close this discussion. Somebody is waiting for you. And a lot of people not able to tell. Anyway, with a lot of passions they are sitting. On behalf of all of them as administrators, we are writing to you. Please go and sit in your place. That's what is the request which has been written there actually. So always before discussing for 1 hour, 1.5 hours, something like that, on my own I think that okay, I am going to tell something seriously. After 1 hour, 15 minutes or 1.5 hours, on my own I used to presume, okay, today I have just spent some serious time of mine with all the office pressures, and I still tried to see that little upward movement in the comfort level is there. Because of me only it has happened. All presumption, who told that is all useful to us, your lecture was good and all. On my own I used to assume. Today also I am assuming that something has been done by me very seriously to you, and a little more comfort level is received from your side, it appears. On my own I just believe. Thank you very much for the passion. Thank you.
We thank you for a very illuminating lecture, and as on behalf of SRC, we present you with a memento as a token of our appreciation.
Once you